everything you said about me, but I hope it was good.
It was mostly good. Mostly. All right, Mike. So we're going to start out by talking a little bit about the venture banking space. So in the larger context here, clearly we all know there's a lot of turmoil, if you will, in the banking space today. Whether it's deposits suddenly disappearing from institutions and the impact of that, or it's just a broader tone in the market of, are we in a recession, are we heading to recession, are we heading back? There's just a massive amount of uncertainty, and I know it's had a lot of impact on how different banks have chosen to react to that. I think one of the interesting perspectives we're hoping to get from you is, in being a private bank in particular, privately owned bank, how does that position you for this environment in positive or negative ways? What's different about the stance coming from that perspective?
Yeah, well, a lot of thoughts there and a lot of questions, and I'd caveat all of this by saying you got one person here with maybe one view and a company's view, and also anytime I say the word I've made a mistake in whatever we talk about. This is whatever we've done together has all been about a team, and so that's just as you pump me with these questions. The venture business. So from Radius's perspective and from Grasshopper's perspective, we spend a considerable amount of time with the venture banking fund businesses as it relates to where they're making investments, particularly in fintech and particularly in areas where it benefits the banking industry. Kind of philosophically, we have agreed that the fintech evolution is very important for the banking industry, and we're going to embrace it. And we've embraced it since we started at Radius with partnerships and a partnership model that we can talk about a little bit later. But we've always tried to stay close to the fund business from the perspective of when we want to use technology, who are their investors, who's backing them, and then what's the landscape like? And from the venture side, they ask us a lot of questions of how you would use this technology, and is it a good solution? So we stay close to those guys. Important part of the ecosystem, obviously, as it relates to fintech and insurtech and all the things that are going on here. From a business model perspective, our view is things are tight. And they will be tight for a while, and we can talk more about our views of the economy. But the message that I would continue to talk to you guys about as it relates to the venture business is, I'll keep repeating this throughout the presentation, your path to profitability. The landscape is no longer asking for, and this has been we've been openly negative as it relates to the venture community's push towards just revenue and not profitability over the last several years, and today it always is about profitability. Not necessarily when you're going to be profitable, but what is the path? Is the path real? And is it something that's tangible and you can get your hands around? So
it's not enough to just have it in the PowerPoint somewhere anymore of one day we'll be profitable. Now there needs to be a more direct path to this is how we're going to be profitable or already are.
Yeah, you got to lay it out because that's what people are looking for today. Is you're not just going to trade, and you're not just going to be a part of the next trade, the next valuation. There's got to be a point of when is this going to be profitable, and how am I going to get my returns? And it requires a little bit of a different focus on your business. And so again, we can talk more. So the other part of it is a private company. Yeah. It's nice to be a private company. I was a part of a public company for almost 30 years. Very challenging to be in the CEO seat and have the marketplace try and tell you, or the analysts try and tell you what to do. Those moments where the 25-year-old is trying to tell me to get rid of a business or to buy a business because it's hot in the moment versus has a long-term sustainable play in our business model is hard. But your stock moves, it's real capital that's going in and out of your company. So it's important. So we have the flexibility to be private. I think it's important for companies that are growing rapidly to have that opportunity to be private, stay private, until you get to a point where you can match up in the public markets against people who have been there for a long time. Other than that, you become a number that I think your growth number will not override your profitability in your stock price as a public company. That's a simple way I would look at it. So as a private company, we feel really good about our abilities to also think entrepreneurially, think a little bit more long-term, and do some things that others might not do because of that public issue.
So what's the downside then, right? What are the things you miss about being in a public company or having the assets of a public company?
I think the one downside is most times, access to capital is a little bit easier as a public company. You have a currency, you have a market. Usually there's a market being made for you by your bankers behind the scene. So getting capital can be easier. That's the only part that we would say we miss a little bit.
I think the one other thing that might be interesting to the audience on this topic is when we think about the venture banking space, are there certain things that stand out to you as things you've seen, either characteristics or traits of companies or in the approach or in the leadership that really have driven success or have been key indicators of companies that may be more successful?
Yeah, it's kind of a broad question, but I'll give you our 2 cents, as we've worked through working with fintechs. And so for what it's worth, Radius Bank was the beginning of our kind of foray into digital banking. And we made a very big strategic decision that we were not going to be a software company and that we were going to partner with fintechs. And in order to do that, we had to understand the fintech and understand their ability to deliver that superior product to us. So we believed in the concept, but then there's the question of how you pick the company to work with. And I would say our notebook is filled with meetings with people. And imagine if my little bank, we meet with 5 or 6 fintechs to try and figure out which one to use. Imagine, Hans Morris in NICA and the number of pitch books he gets, right? And has to sift through who's the right one, what's the right story. And for us, and I would say for the good venture capitalists that we've talked to, it's about people, right? So there's a technology, and it's cool, but we met when we were building out Radius. We needed somebody to do a digital app for us, somebody who could open a depository account in 3 minutes. And we had 6, 7, 8, 10 companies that said they could do it. The question for us was, who could really do it? And it came down to people. And it came down to, do you feel like this person behind the technology can deliver what they say they're going to deliver on time, on budget? And that's the winning formula, I think, for venture capitalists, and that's what they'll all do for you guys is they'll find out if you're the right person with the right technology to deliver the results. So it is about the people, I think.
Yeah, I think culture is always a key element of that too, right? Whatever your culture is, just the right cultural alignment with a partner so that you don't end up in a situation where maybe the tech is great, but your teams just can't work together.
Wow, you just opened a big other set of questions for us here on culture. But we have said to, so again, our story always was and is today, can I pick a young fintech company to help me do something that's more advanced in the banking industry than otherwise exists? And then, can they do it? And part of it is cultural alignment. Do you think the same way? We've said client first all the time, right? So can you think in terms of client first? For us, it was also regulatory. Can you live within the regulatory boundaries that I'm going to set for you? Because if you can't, then don't even try. And are you going to look at your technology as it relates to my profitability versus just functioning? Big part of it, I would say, that got me to buy in when we finally made decisions is, we said we need this technology in place to open an account in 3 minutes, and I need it in 6 months. Okay, I can do it. Well, I need actually 500 accounts a month opened with an average balance of $2,500 in it. Are you going to be a part of that journey? Yes. Okay, so when you're a part of that journey, then you're really a partner with me, and then we're culturally aligned to how the technology works. Not just, hey, guys, you can open an account in 3 minutes.
Right.
Well, if it doesn't work and I'm not getting revenue or clients from it, then it's no good. So that's one of those key components to cultural alignment and asking your question, whatever it is for you. And then, we mentor our own fintechs because we pick young companies usually and how they can grow, and we're big supporters of them. Once you become part of our ecosystem, and it works, we're out cheerleading for you, and we're helping you. But when you pick your clients, make sure you're culturally aligned. Because if you're not, then it's never going to work for you. It's going to be a terrible process to go through.
Right, right. I think one of the other things you mentioned was regulators, right, or regulation more broadly. So let's talk about that for a minute. You know, a lot of the challenge with smaller companies is just resources, knowledge, you know, the things that where even if they want to be compliant or they want to be in a good position, they don't always know how, or they don't always have the resources to do so. How do you think about that? And how do you think about the role of the bank partner in that case, or more generally, guidance towards the startups or the fintechs as to how to engage with regulators or how to think about that dimension of the business?
Yeah, so again, a little bit of a complicated question, but...
You think I'm going to give you easy questions?
So first I would say that your decision to be in the fintech, insurtech environment is you've made a decision to be small, be nimble, and to stay outside of the regulatory environment because you think that you can produce a product faster and better because of your place out there. And I'm 1,000% in agreement, right? The reason why the fintech evolution took place is because banks generally aren't able to produce that industry-leading technology because of a lot of issues that surround it, including talent. So you're in the right place, but you've got to be able to find a way to understand what the regulatory environment is like, and you can't just ignore it because whoever you're working with has some form of regulatory challenges that you have to be attuned to. So one of the things that, for whatever it's worth, we pride ourselves in is we like to make sure our fintech partners understand it. So we go out of our way to make sure they understand what it's like, tell them what they need to do, and if they are buying in, then we're moving down the right path. If they start to move the other way, it's like, I'm not going to do that, or I don't care about that, well, then we know we got a problem. But as a fintech, as an insurtech, you got to be able to find a way to understand the environment. If your client can help you, that's perfect, and they can bring you along. I would say other times find some resources, including hiring, depending on how important it is. We have in several cases said to our fintech, you need to hire somebody who understands the regulatory environment because it allows you to get to market quicker and more successfully. So that first foray into the market, if it doesn't have regulatory issues associated with it, you have a way bigger probability of success. If you run into a regulatory issue, you're dead. I don't mean to say it that, but if the regulators come to your client and say, I don't like what this company is doing, well, then it's over. That company that's under the regulatory environment is going to say, I can't afford to work with you. Right. So make sure your client is willing to help. If not, hire part-time resources or even full-time resources so that you can get to market quickly and appropriately.
Yeah, it reminds me, so I have some past history working at a couple of large banks here in town, and I remember working with smaller fintechs, and at one point one that I really liked, but was just clear they're nowhere near ready to work with us as an organization. Basically telling them, like, you don't actually want to work with us. Like, go away and get your regulatory or compliance side in kind of better order, and then come back, and then is a good time to partner. But I think a lot of times fintechs can underestimate the amount of complexity that involves and the need to kind of be up to snuff, or to your point, they can not only miss that opportunity, but that kind of get blacklisted from other opportunities, because once it's kind of found out that one bank has turned them away or said, you know, you're not up to snuff from a regulatory perspective, it can be the end of that opportunity. So I think there's a lot there in what you guys have done, and just the general philosophy around, you know, partnering with these organizations to help take them forward. I think that's pretty powerful. So you say I keep asking you hard questions, so I'll ask you an easy question. What's your favorite place in the world to visit?
My favorite place
Turns out it's also a hard
in the world to visit. There's a lot of favorite places. I would say it is my fire pit in the backyard of my vacation home. It is the most favorite place for me to go. I can't deny it. If I can get there and just be relaxed, I'm happy.
All right, so now I've warmed you up, right? You got an easy question. So now let's talk about the macro environment. What's going to happen to the economy in the next 24 months?
Okay, so you got one person here, and I'm not an economist. But I think that we've got inflation. Anybody who has been to a restaurant or been to a grocery store knows there's inflation. It's real. And we can get caught up in the numbers of 4% versus 4.6. I think they said it was 4% increase year over year versus 4.6. That seems pretty small differential for me on a path to get better, but it is getting better, but it's real. We lived in a low or no interest rate environment forever, which was too weird as well. And now we're going to have to get used to a higher interest rate environment. I'm not sure the current rates are where we're going to be, but we're not going back to zero in the short term. And I think there's some pressure on the economy that is going to come. And there's going to be some people and companies that don't fare well during it, and we're going to have some form of pullback. But I don't see it as something major or catastrophic. And I think we'll probably get through it over the next 6, 8, 12 months or so.
Does it change the way you operate the bank at all? Do you start making more short-term decisions and fewer long-term commitments, or does it change where you make investment or where you hold back, et cetera?
Well, I mean, sure. The way we, the technical way we run the bank is, we've got to make, investments. We've got to be cautious about interest rates. We've got to be cautious about long-term interest rates. But I don't think it doesn't change our strategy at all from the perspective of we are deposit generators. We're looking to be disruptive in the small business or innovation economy in which we think it's dying for new technology, and that new technology we've put in place and is attracting a whole bunch of clients, and we'll continue to push that. We believe in the banking as a service business and have for a long time. Chris Tremont's in the audience. I think he's the father of banking as a service. We called it indirect banking in the early days, and then someone gave it the moniker of banking as a service. It's cool, but that's a growing business that we know the industry needs to embrace, so we're going to continue to do that. We've always been fairly conservative when it comes to credit, but that's where most of the changes will take place inside the industry is, kind of a tightening of the credit, which never helps in a recessionary environment, but that's the reaction. And we'll need some regulatory support to get through that, but I think this is continuing to select the right clients to do business with, be cautious about, what the growth probabilities are during the next 12 months or so, but it's still a short window. I mean, I hope all of you are looking long-term as it relates to your product or your service or whatever you're offering, because that's where you got to look. Is the industry going to continue to move in the direction of embracing technology and needing it, and are clients going to continue to demand it? Yes. Will we get through a blip? Yeah.
What about its impact on capital for investments? Again, if we think about from a fintech or a startup standpoint, any guidance or advice as to shift in strategy or different ways to think about the approach?
Well, I would go back to path to profitability, and because there's going to be capital available for the right companies, but it's not. There was too much capital chasing too few great solutions. I think that's a fair way to say it. And I think what happens is then you start to take a look at less capital on chasing those fewer solutions, and there's a little bit of a, goes upside down. But you have to start clearer path to profitability, potentially taking or giving up a bit more stake in your company, because that's going to be part of it. And I think the absence of guys like Silicon Valley and First Republic are going to have a negative impact on the portcos, the portfolio companies that are out there. But I do believe that as as an industry, we usually find ways to replace that lost capital over time. So it's not a lifetime loss, it's a short-term loss. And again, if you can produce that path to profitability, focus on expenses a little bit more than you would have in the past, you're going to still meet the right clients, the right venture guys who want to put money in your business.
All right, we'll shift gears a little bit. Despite your humbleness, you're clearly a very accomplished leader. You've done quite a bit in your life and been very successful. Why did you choose to go to Grasshopper and become part of that journey? What was it that attracted you to that opportunity?
Yeah, so we several of us joined the Grasshopper, but the team. So I would go back and say when when the vision somewhere in 2011 or 12, once we got through that last recession, was we wanted to build a digital consumer bank that had no branches. And we wanted to be on the leading edge of it. We wanted to go where the industry was going. And that wasn't really complicated. We knew people were going to adapt and embrace technology. The question was, how do you do it? When do you do it? And do you want to be a leader or do you want to be a follower? And so we wanted to be a leader. And it was really this model of embracing fintech partnerships worked out really well. We found a structure to the company that was really focused on cross-functional teams, no bureaucracy, no hierarchy, a lot of decision-making. So the culture that we had built was really good, and the outcome was great. So nobody wants to sell their company, really, if they built it. But at the end of the day, we all have investors, and we've all got all these other complicated things. But towards the tail end of our journey at Radius, we started to enter this business, the business side of it. We were all consumer. And several of us as a team had this vision, when we're done with consumer, we're going to get to business, we're going to get to business. And right about when we got to business, the company was sold, and we felt like there was something missing that we wanted to accomplish. And then I think we all found out as well that when we left big banks and came into this small entrepreneurial world, that we had some of that founder philosophy and that founder energy that we liked. Like, we look at ourselves periodically and say, what are we doing again here, right? This is hard. And it's like, well, we like it. So we felt like there was a void. Grasshopper was an organization that had been a de novo bank and had struggled with its strategy, mainly because it had chosen a path of being a software company, and it wasn't working. And I'm not saying I'm right or we're right, but it just didn't work. Everybody has a strategy. Everybody's strategy can work. We'll talk about that at the end. But so we had a void, and we wanted to fill that void. And when it popped up, we said, holy crap, we get a chance to now see if this could really work. So when we left Radius 2 years ago or so, the team came over, and within 24 months, we've grown above what we were doing at Radius. We opened 1,000 accounts a month for small businesses on the deposit side, and that's coming from zero, really just 12 months ago, thanks to guys like Tremont and others that are doing this. So we've really seen, and somehow or another, we get a kick out of that success of being able to do that, being able to take something from zero and produce a great result. It feels good. You all know, right? That's what you guys do for a living. So that's how we ended up at, and the other thing we felt pretty good about was, like I said, the model, the culture that we had put in place was different enough and was really successful that we were kind of saying, this is cool if we could do this again and see if it can work again. But, were we lucky? It was a little bit of the, everybody's lucky who's successful, right? But at the end of the day, we wanted to see it happen again. And so far, so good.
Yeah, that's awesome. Congratulations,
Well,
right,
thank you.
for one, because that's
The
really
team.
awesome.
Yeah, the team is
Clearly,
great.
congratulations to all of
Yeah.
you. When one of the things that occurs to me in that journey is how do you make decisions about where to go from a product standpoint? I got to imagine, resources are tighter, right? You're trying to build something from scratch. You've got to be really, really careful about what you build and what you invest in to make sure it leads you to the opportunity. It has the greatest chance of leading you to opportunity or to success. How do you think about prioritization in that context?
Wow, there's at least one person in the audience smiling at this question. So this is the age-old question inside our company, right? So we've got, you're going to hear a couple philosophies. So one is focus, right? Very important that if we are going to get to execution and produce results, we've got to focus. And I like to say my favorite line is 10 things half done is worth shit. 3 things done is worth a lot of money. So and that's where this product idea comes into play. Is like, what's next? What's the next shiny object? What can I do to enhance the product? And so I fight it with the guys. So I'm on one side here saying, we got to only have 3 things going on. The product has to work and the customer experience has to be outstanding, and the bells and whistles, then the next generation can add value, but not until the fundamental product works and the experience is outstanding. Because as consumers of a product, our view is that a good product working really well wins the day versus a really cool, shiny product that doesn't work that well. So all the bells and whistles and they don't work, annoying. A great product that works really well, an outstanding hit. So that's the battle we have in the company, and I think the culture of the company is, stay focused, get the product to a point where it's doing really well, and then start to introduce a new one. That's our product roadmap meeting, in which we sit around and say, what's the next one, what's the next one? But not until the other one is doing what we said it was going to do. And then we can put that to bed, and then we'll introduce the next one.
That's probably a healthy tension, right? You don't want to be, while I agree with the overall strategy, and to your earlier point, different organizations can take different strategies and be successful with them. I've got to imagine that tension of extreme focus versus like, but this'll get us the next customer, or this'll meet the parity in the market. It creates probably some healthy conversations.
It does, and again, I've been, I don't always win. I'll put it that way. So when there's a voice out there that says, Mike, you're being too conservative, we got to go to the next level, I listen. And we'll move to the next product. But we like to make sure we've gotten things done that produces the revenue. Back to your path to profitability as good founders, when you can produce the revenue that you say you're going to produce before you move on to the next one, I think you're going to be in a better place raising capital as well.
Yeah, absolutely. All right, well, I want to tell the audience, so we do have it set up to take questions. If you want to go in the app and submit a question, if I can manage these 2 iPods or 2 iPads at the same time, I will look and ask them in a second. But while that's loading up and while you all have time to think about it, I know one of the things that's really important, and we've kind of touched on it from different angles, but it's just the culture at Grasshopper and how important and crucial that is. How would you describe that? Like, how would you talk about the culture and to give people a sense of what it's like?
Yeah, we kind of speak in terms of non-negotiables. So I'm not the chief CEO, I'm the chief culture officer, right? So we want to make sure, first of all, we have a culture. People like it, they don't like it, it's okay. Everybody has a culture, but what we want to make sure is that everybody inside the organization is aligned to that culture. Because when you're rowing in a different direction, I can't hire a product shiny object person who doesn't align to the culture of, we're going to do products, but it's not going to be the #1 thing we do. That person has to go work for a company that loves shiny new objects. And I'm not saying it's good or bad, but you just, you can't mix them. So the most important thing I do is when we interview people, of which we make sure either me or my senior team is interviewing almost everybody that comes in the company, I don't really spend any time trying to figure out whether they can do the job. I try and make sure they understand our culture so that when they come into the organization, they're going to be really comfortable and know what we're trying to accomplish and know who we are. So we are client first. So an organization, especially the banking business, we all say it, but at the end of the day, we ask the question is this going to benefit the client? And if it does, we got to find a way to do it. We don't have the technology or finance or credit guys say, no, this is easier for me to do this way. Nope. If it's the client, it's got to be the client first. The second thing probably I'd mention is teams. So we are no silos, no hierarchy, no bureaucracy. Everybody's at the same level. Everybody gets the same voice. Everybody gets to make decisions. We encourage decision making, but we work in teams. So everything is a cross-functional team. There's no business line. You know, we have a small business group. It's one person, and then that person uses the rest of the organization in a cross-functional team to get their business to the next place. So everybody's a part of it. Nobody's a back room. Everybody's the front room. Everybody's a part of it. Entrepreneurial. So we think in terms of getting things done, and think in terms of that focus and execution. Fail fast and fix it. One of my favorite lines is, right, make decisions, and if you fail, it's okay. What's your decision-making philosophy, we say, what's your strategy on making a decision is way more important as far as I'm concerned, than what your decision was. If you've got a good decision-making process, you're gonna make 70% of the time, you're gonna make good decisions. Make that decision, move forward, because no decision is your worst decision. You can't get caught up in it, you gotta move forward. And if you fail, just fix it. It's okay.
Just to stop you for a second, I mean, that's a pretty surprising thing to hear a bank say, right? I mean, fail is not language you would normally hear a bank talk about in general, regardless of how realistic it is. That's a pretty bold position to take, right?
Well, yeah, that's why we're different. I don't know. I don't know what to say. We don't really consider ourselves a bank. I guess I got to be careful what I say. We are regulated by the OCC very tightly, but we kind of think we're a fintech with a charter. So those banks those fintechs that have bought a bank or tried to become a bank, yeah, we think we were the bank, and then we were the fintech. So we do think differently. We do organize differently. Now, we're not going to take risks on the credit side. Okay, we're not going to take capital risks, but we manage our risks and again, fail fast and fix it, a big one. Decisions, I keep pushing down decisions. So, and then we respect the regulatory environment. That's an important thing to do as an organization like us. We've got to be on the right side with the regulators. And we have a partnership relationship with them. Before we do anything, we talk with the regulators about what we're going to do. We're preemptive, proactive, and engage with them on an ongoing basis. They're my partners. So those would be, and maybe an important one, work hard, play hard, have fun. We work way too hard to not have fun. So if you're not having fun, I don't know what you're doing with us, because we want to make sure that everybody's having fun at what they're doing. When it's fun, it's not a job, right? So find a way to have some fun at what you're doing. And then we like to create an environment in which people can thrive, right? So we care about people. We want you to be successful, whether it's with us or with somebody else, but we want to create an environment. Work-life balance, very important for the people that are around our organization. We are a work-from-away company, unless there's a need to come together, and we like to come together for kind of creative reasons periodically, but other than that, we treat people like adults, get your job done, and when we treat people like adults and they behave like adults, they get their job done at a faster and better pace than otherwise we believe.
So this was the recruiting pitch part of the conversation, because I don't know about y'all, but I'm certainly thinking, man, that sounds like a pretty fantastic place to go work. Let me jump into a couple of questions from the audience really quick. One of the questions was around, how do you continue to encourage innovation in a tight market? How do you make sure that you're still bringing innovative things to market? How do you break through, whether it's funding challenges or whatever the case may be?
Well, again, my quick answer to that would be, it's our partnership model of being at events like this, where we're always talking to founders and companies like you guys about how we can enhance our delivery and or our product or our profitability, whatever it may be. So it just doesn't cost me anything to be here. I want to be with you guys. I want to hear what you're doing. And I think that's important for us. So we don't have 50 software guys that we got to lay off half of them because we can't produce a product. We got all you guys that we want to partner with and talk with. So that's a, and it's a big part of what we do every day. Innovation is not a second or third kind of part of what it's who we are. It's our culture. It's what we talk about all the time.
That's what lots of banks say, but very few, I think, actually deliver on, right? So again, kudos for embedding that in the culture.
Yeah. So, we all spent time at big banks, and we all saw what happens when things get tight. Your marketing dollars go, your technology dollars go, you're just surviving, and then it's hard to get it ramped up, and that's because the 25-year-old analyst is telling you your numbers don't match up perfectly, and you do some things that are uneconomic. So we've learned how bad that can be, and I think we've fostered the other side of it.
One specific question here, and then I'll hand it back to you I'd love to hear a couple of your just kind of takeaways or anecdotes from your kind of career and travels so far. But there's a question about, has the recent third-party partnership guidance from the OCC helped at all to help inform your banking as a service perspective, which I think is a really interesting one.
Yeah, it's helped. It's helped. I think we would probably we wrote it for them. And I'm not kidding. We work very closely with these guys, and we've been in the banking as a service business for longer than most, and we've had a really kind of successful partnership program that's been out there. So, yes, it's helped, but I think it's helped my competitors more than it's helped me. I do think it goes back to when I'm looking at this audience, I think, and thinking about what you need to understand that part of it, because that's their expectation, so that helps you a bit. But mainly, I think it's a message from the regulators that this is not going to be the Wild West as it relates to partnerships, and there is going to be regulatory scrutiny of it, and you're going to have to stay within the boundaries of the rules, and when there's new things that are coming out like this, you got to be really good at it. Goes back to the, I think, previous comment about where the regulatory environment stands, what your stance is, how do you understand it, and are you aligned? I mean, kind of in a weird way, if you go to work with a bank or an insurance company and they're not asking you about regulatory, then you're in the wrong place, because they probably don't, it'll never get implemented if they're not thinking regulatory.
Right. A lot more questions in here. I encourage you all to find Mike and talk to him in the hallway and ask him questions. I want to give you a chance to close it out with just some of your life lessons, anecdotes, however you want to think about it, and impart some further wisdom on our audience that you've picked up along the way.
These comments are not going to go over well with the team of mine that's sitting out there. I'm going to catch a little flack.
Didn't like they're not there.
All this wisdom, they don't believe in it. But the thing that, there's three things I would say, and it reminds me of, I'm too old for rock, scissors, paper, whatever that game is, right? But culture trumps short-term profits. My notebook says it forever. It's the truth. Don't ever go against that. Don't ever get drawn into making a bad cultural decision for short-term profits or short-term gain. It'll never win. It'll never be worth it. Execution trumps strategy. Okay? At the end of the day, we need a strategy, but if you don't execute against it, it's just terrible. So don't think your strategy is going to win any day. Become execution focused. Make sure you do what you say you're going to do, and when you do, the world's going to be good. But no strategy will ever win, and there's more ideas than there is people to execute against those ideas. So execute. And then I would say passion over experience. So when we're hiring people, I believe most people can do a lot of different things, especially if you're passionate about it. So when we look at people coming into the organization, if you're passionate, you're going to win. And I tell you, passionate people will outdo anybody with experience any day, and they'll get you to the next level.
Awesome. Well, thank you so much, Mike. It's been a great conversation.
Thank you.
It's been great to hear from you. I really appreciate it, and thank you all of you.
Thank you. Appreciate it.
I believe we're headed to a break right now. So if everybody wants to take a break, and we'll be back at 10:20.
Please take the next few minutes to refresh your coffee and network with the attendees before we start reconvening the sessions at 10:20 a.m.